Hi, and welcome back to the Cheeky Crypto Podcast. My name's Chris, and it's fantastic to have you back with us for another podcast video. In today's podcast, we're going to highlight the biggest and most important news, the biggest happenings in the space that I believe you need to be made aware of. If you enjoy this sort of content, mash up the like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. Don't forget to jump down into the Discord. Link is in the description of the video. It's absolutely free to join. Over 7,000 people supporting one another navigate this space safely. It's a fantastic community. Definitely worth immersing yourself there. And don't forget, you can join us in the Discord on Friday for the Token Riot free mint. To find out more information, meet us in the Discord, have more meaningful conversations with us there. Right, let's get down to the desktop. Okay, so we're going to start here, and I want to talk a little bit about the risk, because, you know, I like risk and I like to mitigate risk of meme coins. And we've got it here. So a crypto trader pays 120k in fees to buy 156k of meme coins. Look, we need to talk about this, because there has been individuals front running people that are buying, you know, these shit coins, meme coins, whatever we wish to call them. And there is real risk there. 156k. I mean, this isn't a small time player by any stretch of the imagination, but it goes to show that you can end up paying, you know, huge amount in fees, particularly for these meme coins that are on the Ethereum chain. So, you know, just be aware of that. We've got MasterCard, PayPal, Robinhood dive deeper into cryptocurrency industry and shows a lot of promise. They've missed off Visa. I mean, how can you miss off Visa? Because it's not just MasterCard, it's Visa as well. These two monstrous size payment firms are deep, balls deep in cryptocurrency and blockchain technology. And I think this is a real positive, as I've been talking about for a long time. You know, the market cap of crypto is really small. We're less than $2 trillion. I think the height of the bull market was about $3.5 trillion. Nick and myself back in 2020 said, look, we envision, you know, $10+ trillion worth of market cap for this space. We haven't, you know, had that level of adoption yet, but these are the signs that we are getting it. Yeah, and we are getting closer and closer. You know, lots of more on ramps and off ramps being provided by traditional fintech payment firms like MasterCard, like Visa, like PayPal, like Robinhood, and this is real positive. We've got crypto options liquidity provider Orbit Markets offers Bitcoin and gold hybrid derivative. The company said that the product payoff will depend on joint performance of both BTC and the gold-backed token 𝗂𝗢𝗓. And again, look, really interesting that we're going down these routes. Orbit Markets, an institutional liquidity provider of crypto options, is rolling out the first Bitcoin and gold hybrid focused derivatives product with execution broker Pi Digital. So look, new things emerging, new markets emerging, new products emerging, big players in the space that, you know, from the traditional finance sector. You know, I think this is all really positive stuff. But, you know, does it scream, you know, bull market? I'm not so sure. The macro landscape, no matter how forward looking these markets are, I don't think the people, you know, big players in this space have got it right. And for that reason, I do expect some big, you know, volatility in the space, not just in crypto, but also in the stock markets. I am expecting, when the Fed decides to pause, that we see some really bullish movements in the stocks and the crypto market. But that will be short-lived, because when they pivot, I expect a reversal and deep correction. So look, we'll see how things play out. I see the likes of Real Vision talking about, you know, markets being forward looking. It's all about liquidity. liquidity isn't there, in my opinion. I do think that there's a lot of volatility still to be seen in this space. People talking about the bottom being in because ETH didn't bottom back when Bitcoin did in October, November, and I just think that there's far more to this situation than people are really letting on. Either they're dishonest individuals or they're just making a mistake, and you can let me know in the comments below what your thoughts and opinions are on that. We've got institutional interest in crypto is maturing. And this is something that we've seen lots of crypto events recently, and traditional traditional finance companies have been going to these events. Now, I am going to not really talk through this on this podcast. I'm going to drop it in the Discord for you to read through at your leisure. But it is really interesting stuff. We've got crypto exchange Coinbase posts smaller losses on cost cuts and more revenue sources. So things are looking rather positive for Coinbase right now. We've just seen Bittrex, which we covered in the previous podcast, basically file for bankruptcy in the US. We're seeing Coinbase looking to move out of the US, and I think there's going to be many more that follow suit, unless this movement is what causes the US government to do a 𝗖𝗢𝗠𝗠𝗘𝗡𝗧𝗏, and I think that is a high possibility that we do see them do a U-turn and put in some real favorable policies. And with that said, some of these stocks could do really, really well. The public projects, exchanges, and so forth. We got 𝗕𝗘𝗪𝗏 affairs in doubt after coin loan collapse, according to Bulgarian regulators. Now, what I would say is, coin loan collapse hasn't really got as much, airtime as the likes of Celsius and various others, and mainly because it's it's fairly small in size. But this is a service that I did use back in 2020 for about 6 months or so, and it was really, really good. But ultimately it failed, and look, I think anybody associated with failed companies like this, where basically retail or investors lost money, it's questionable how they can be still in business running other financial businesses. It's just my thoughts and my opinions, but let's say Sam Bankman-Fried gets prosecuted, does his time, and he comes out of prison. That's even if he goes to prison. But let's say the justice system is fair and it's justified, and he goes to prison, he gets out. Do you think that he should be able to run another business in finance after everything that he's done? I personally don't think he should. I don't think the CEO of Celsius should be able to. Voyager, any of the traditional banking sectors, Signature Bank, and all of those. I don't think that they should be able to. They should, be, forced not to be part of it, because these are not just like little failures; they're big failures, and I think there should be some repercussions, because if you want to drive the right behavior, there needs to be really strong. I mean, how many strongs have I said? It needs to be, like real massive, huge consequences, for people that, do wrong in the space, even if it's like a genuine person, but they absolutely F up. Like, there needs to be a consequence that makes those individuals surround themselves with the right people to do the best job possible. When people are like, doing silly things, taking their lives, all this sort of stuff, like, there needs to be consequences for the people that are inflicting this sort of damage in the space. There needs to be safeguards. And this is where like regulators really do need to play their part. The SEC have got it so wrong. There should be mechanisms in place that basically the regulators get sight of like liquidity issues within traditional and non-traditional finance companies, exchanges, banks. Like, there should never be I guess a time frame of like 3-6 months where you don't have a lead risk manager at your firm and stuff like this. I just think that there needs to be mechanisms, early warning sign systems that stop this sort of stuff from happening in the first place. But then on top of that, the people that do lead these big companies that are worth silly amounts of money and cause pain and loss to investors should have some sort of consequence, whether that is a ban that they can never perform in that. It's like doping, right? Like at the Olympics, like you get your medal stripped, you never get to compete again, or you've got a 10-year time frame that you can't compete. I think that should be a lifetime ban, and I think that should be the same if you fail in like cryptocurrency or financial sector. Potentially you should have like a ban of some sort where you can't participate no more. I think that is something that needs to happen. But let me know your thoughts and opinions in the comments below. And then we've got long-term Bitcoin holders add to their holdings even as the price retraces. And I think, some of these traditional media outlets are missing the point. They're buying the dip, right? And, this is something that, I do quite regularly. I buy the dip, dollar cost averaging into projects that I think are going to do really, really well in the short, medium and long term. And I think that is the best way, right? Trying to catch the bottom is never the one. It's never the one that works. It's always the one that gets you wrecked. Swing trading your whole portfolio will get you wrecked because, you just need a narrative. Artificial intelligence and machine learning narrative right now took AGIX from like 3 or 4 cent all the way up to like 67 cent, and if you were swing trading that, you may have got wrecked. So, just be careful out there. There isn't a right way and a wrong way to invest in this market. You do you, I will do me. But, for me, dollar cost averaging is always the most successful way. If you enjoyed today's video, mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.